Hi there, good afternoon. You've tuned into ET Now. I'm Cheryl D'Souza. Along with me, I have Ankita, and welcome to Cracker Stocks. This Diwali, let's thoughtfully shape your portfolio with the stocks to suit every investor. So for those who value stability, we will be showcasing safe sparklers, which are steady, reliable picks for consistent and low risk growth. For those who are open for a bit more risk, there are high-risk rocket stocks with strong growth potential for the bold investors. And lastly, for all those who are value-driven minds, we will have value bombs given by our experts. Those are the hidden opportunities that are ready to reveal their worth. So in this show, for the next 30 minutes each day, we will get you those safe sparklers, high-risk rockets, as well as value bombs to make sure that you are well prepared to take on the new samvat. Right, Ankita?
Absolutely, Cheryl. So this is a new show to ensure a crackling Diwali for all our viewers. But also, let's look at the market. Even today, we're getting some bit of a market Diwali cheer that's coming back to the markets. But let's see if it sustains or not, because this is also the expiry week, so we could expect some bit of a volatility. But for now, Nifty is trading. It's managing to hold on to those 24,400 levels. It is almost 200 points off day's low. Nifty Bank is also trading in tandem with gains of almost 1.2%. And speaking of banks, then ICICI Bank is lending a strong support to the Nifty after a good Q2 show, and a good brokerage upgrades that came in for ICICI Bank. Ditto for Shriram Finance, also trading with gains. It was trading with gains of almost 7% in the morning, has given up those gains, but is still sustaining above the 5% mark. Other banking names, especially from the PSU pack, which is also the top sectoral gainer, names like Bank of Baroda, Canara Bank, PNB, they're all trading with gains of 3+%. Bandhan Bank also had the management of Bandhan Bank on a channel, and they gave a decent commentary on the bank, and on the back of that, we do see Bandhan Bank in focus. Yes Bank also posted its Q2 numbers. Metals are also the other pack that are shining away in trade, with NMDC, Hindustan Copper, Hindustan Zinc all doing very well for themselves. In fact, all sectoral indices are trading in the green. Market breadth looks tilted towards in the favor of the advances. Also, broad-based recovery is what is coming in. Broader markets also doing pretty well for himself. Stocks that are not doing very well, of course, Indigo, it's posted its first loss in the last 2 years, and that has seen a bit of a crash landing. Credit Access, Chola Mandalam, all of them declining in trade today. So that's how largely the market is panning, Cheryl.
Absolutely. So those are the movers and shakers in trade today. But we have a guest today to decode those safe investment ideas, or high-risk rocket ideas, or value bombs for all of our investors out there. And we have for now Aditya Agarwala, who's joining us in the show, who's the head of research head of research and investments at Invest for Edu, as well as we have Naresh Mirani. And a short while from now, we'll have Sudeep Bandyopadhyay also joining us on the show. Very good afternoon to you, gentlemen, and thank you so much for joining us on the special edition, or Diwali edition, of Cracker Stocks. And firstly, let's talk about those safe sparklers, right? Given the fact that the way how the markets have been pretty volatile of late, Naresh and Aditya, it's always pertinent and important for one to look at those safe pockets of investments where they know that they are steady, they are reliable, they are also good for those who are conservative investors, isn't it? So Aditya, let me come first to you. Which are your safe sparklers, and why? Why have you picked those stocks?
Good afternoon, Cheryl. Good afternoon, Ankita. Thanks for the show. I've got a couple of names in the safe sparklers. One is from the IT pack, and one is from the banking name. From the banking name, HDFC is something which is looking extremely good to me on the chart setup. It's a heavyweight on the index, Cheryl, and this is one stock which hasn't performed, we know, for the last 3 to 4 years. It's been a long consolidation phase for the stock, and off late stock has finally started to move up. And recently, it also has broken up from that highs of the previous 3 years. So looks like now the stock is gearing up for a big up move on the upside. And we know it's a heavyweight, so it will take its time to go higher from current levels. So it offers an excellent risk to reward. And I feel if somebody is looking at a large cap exposure, HDFC Bank should give you that comfort and that promise of an outperformance as well within the Nifty 50 pack. If somebody's looking on to hold on to it for at least a quarter to 2 quarters, I'm looking at a target of 2000 on the upside. If somebody holds on to it for slightly longer term, I think 2500 is something which is very much doable on HDFC Bank. So given the current price level of 1700 odd levels, this is one stock which our users would not want to miss out on, and definitely add on their portfolio for a target of 2000 about 2500 from a medium to long term time horizon. For the second stock, which is the IT name, is Coforge. We have seen IT make a comeback post elections, and especially after the recent Fed rate cut. So I think IT is here to stay, and IT will continue to outperform in the coming times as well. Within that IT pack, Coforge is something which is looking very interesting to me. And has outperformed. We all know that within the mid-cap IT space, Coforge has been one of the best performers, continues to make higher highs, higher lows. Stock has only given a return of 21% YTD within that IT pack because IT hadn't performed. So I think in the coming times, it offers an excellent risk to reward from current levels and can easily test levels of 8400 on the upside if somebody is looking to hold on to it for at least 6 months to about 7 months time frame. So medium time frame target is 8400 on Coforge. And I think IT is something which one should definitely look at if somebody is looking at safe bet to add in their portfolio.
Right, Aditya. So HDFC Bank and Coforge, one banking name and one from the IT space to watch out for as far as the safe bets are concerned. But Naresh, coming to you, you tell us what are your safe sparklers? Do you see value in the banking names, IT space? At least Aditya picked out those names for us. Tell us what are your safe bets?
So again, the first one is HDFC Bank. Very similar reasoning. The stock has gone nowhere for the last 3 years. In the initial move from 2020 bottoms, the stock topped out at 1600 back in start of 2021, and since then the stock has gone nowhere. We had the merger, we had MSCI rejigs, and multiple things happened. And in the last 3 years, 1400 to 1500 has been the downside, 1700, 1800 has been the upside. The only difference is in the last 6 months, we've seen more attempts on the higher side than on the lower side. There have been 3 attempts already around that 1750, 1800 mark. That clearly tells you that eventually this range would break and we could break out on the upside and go towards the 2000 mark. So expecting this to be a stock which tests the 2000 plus mark in this next 6 to 12 months, or could be even faster, would keep a stop loss below 1650 and a target price of 2000, 2200. The second one would be a buy on Larsen and Toubro. This is a stock which had a solid run from 2023 along with the rest of the capital good names. But unlike the other capital good names, the stock did not see a major run in 2024 as such and has gone sideways for the last 1 year roughly. The stock had first broken out into this 3000 plus mark in the start of 2024. 3200 has been the bottom roughly on the day of elections as well as in February to May 2024. So currently at 3300, 3400 looks like a good entry opportunity. Would expect eventually a move towards 4000 to 3800 levels. Stop loss, I would keep it at 3200.
All right, so just to recap the picks that are coming in from both of our experts, that is from Aditya and from Naresh. I have to say it's a consensus buy call coming in for HDFC Bank. For you, actually, Aditya, the target price, you've set it around 2,000 rupees for the quarter or for 1 to 2 quarters. Otherwise, if one is waiting to hold on for the longer time, then the target set is about 2,500 rupees per share. But Coforge, I didn't quite get your target for this one, actually, Aditya.
So Cheryl, I've got a target of 8400 on Coforge.
It is the target for Coforge coming in from Aditya. While for HDFC Bank, if you look at the target that Naresh has set, it is around 2200 to 2200 with the stop loss at 1650. And for L&T, the target is around 3800 to 4000 rupees per share with stop loss at 3200. So Ankita, yes, HDFC Bank once again making sure to actually sparkle bright and considered as a safe sparkler once again.
Absolutely, Cheryl. In fact, HDFC has been on the radar for quite a few analysts also.
Absolutely.
Since the elephant has not moved, probably this is the time when it is time for the elephant to start dancing now. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right with some more crackling stocks for you.
Welcome back. You're watching Tracker Stocks right here on ET Now, a Diwali special episode coming in for all of our investors who want to actually make sure that they're stacking up their portfolio rightly. So we have safe sparkler bets coming in from our experts. We already have Aditya as well as Naresh give out their safe sparkler bets. Just a quick recap on that. You have HDFC Bank, which is a consensus buy call coming from both of our technical analysts, as well as you have Coforge coming in from Aditya, as well as you have L&T from Naresh. So those are the safe sparkler bets coming in from our experts. We have Sudeep Bandyopadhyay also joining us on the show right now. Good afternoon to you, Sudeep. And safe sparklers considered to be safe bets, better bets to be in, irrespective of the volatility in the markets. So what are your safe sparklers for all of our viewers?
Well, my safe sparkler is from an industry whose motto is safety, and I'm talking about the insurance industry. The leading player in the private sector in the general insurance space, ICICI Lombard, is my safe sparkler. The tailwind behind this industry, the under-penetration in India, and I think the whole opportunity has been discussed again and again over the last few years, and I don't need to add anything there. So the opportunity is humongous. Look at what ICICI Lombard has been doing. They have been the leaders in the motor and health space in the private sector, and they've been growing very, very rapidly. The fire business also is growing. The management team has been rock solid in spite of the transition of top management after about 14 years. The growth has not got affected. It is moving very, very smoothly. That shows the strength of the management. Apart from the normal distribution challenges which many companies have, ICICI Lombard has a fantastic balanced distribution. Whether it's the agency network or the bank assurance network, they have fantastic hold on both, and the business progresses through both these networks. Overall, I think considering the opportunity, considering the strength of the company, considering the distribution strength, I have no hesitation in classifying this as a safe sparkler and recommending a price target of 2,500 for 1 year. Investors would do well to invest in Indian insurance industry and ICICI Lombard in particular.
Right, Sudeep, you've picked out ICICI Lombard, of course an industry leader as far as the motor segment is concerned. In fact, even in the Q2 results, it has outpaced its peers as far as the motor and the health insurance segment is concerned. But coming to you, Aditya, now for the big bombs of a stock, the ones that are high risk but also high reward, and this is for all our investors who take calculated risks. Tell us what are your picks from that segment?
So I've got a couple of names there as well. The first one is Honeywell Automation. Now, Ankita, this is one stock which had broken out from a long consolidation phase, and we had seen a massive run up on volumes from around 40,000 odd levels to about 60,000 odd levels, and from there it cooled off. Now it's taken support at the breakout neckline, and from there stock has resumed its uptrend. Interesting thing is stock did not see much of a volume backed selling pressure when the stock cooled off from the highs of 60,000. So I think this is one stock which is now getting up for an uptrend again, and at current levels offer an excellent risk to reward ratio as well. So on the upside, it can test levels of 60,000 to about 65,000 again. On the downside, 45,000 is an excellent support for the stock. And if I plot an RSI and MACD, they too are confirming the bullishness in the stock. And as I mentioned, because of the sharp run up and the sharp cool off in the stock, it can be a little more volatile as compared to our safe sparklers that we had recommended. But again, it offers an excellent risk to reward and the high reward as well of 65,000 all the way up from current levels of around 49,400 to about 49,500 with a stop loss at just 45,000. This is one stock which definitely takes the list. The second is chemical stock, which is Navin Fluorine. So most of these chemical names are looking attractive. They formed a good base consolidation, and now they're looking to break out of that consolidation. So Navin Fluorine is also some one stock, Ankita, which is getting up for a breakout from a downward sloping trend line. At current levels, if somebody is looking to add on to the stock in their portfolio, can easily test levels of 4,000 to about 4,300 on the upside. Again, if I plot RSI and a couple of moving averages with MACD, they're telling us that the stock is coming out of a long consolidation in a bear phase and getting up for it to get into a bull phase. So Navin Fluorine for a target of 4,000 to about 4,300 at current levels, I would add in my high risk portfolio, and Honeywell Automation for a target of 60,000 to about 65,000 at current levels of 49,400, I would add in my portfolio.
All right. right, so that's the high risk or rather high risk rocket bets coming in from Aditya. That is Honeywell Automation as well as Navin Fluorine. And remember, these high risk rockets are bold, high reward stocks with rapid growth potential for those who enjoy taking calculated risks. So talking about calculated risk and one of the high risk rockets, Sudeep, which one is making it to your list, and also any caveat that you want to give our viewers while actually looking to invest in these companies also?
Well, the high risk rocket, I would say, is a company from an industry which is very much in focus. This is the recycling industry. Again, there is a significant tailwind behind this industry globally. And the company I'm talking about is Gravita India. It's the leader in India in the lead recycling. We know the environmental need for recycling, and this company is playing in that space. Apart from the lead and other recycling, which is currently doing, they are diversifying into multiple other areas of recycling in India itself. And, obviously for environmental reasons and for regulatory reasons, these are gaining momentum significantly. Apart from this, they have taken a strategic step of entering European market. Now, we all know Europe is environmentally the most conscious geography, and they acquired a plant in Romania. And through that, they have entered the tire recycling business in Romania. We believe that this will give them a significant leg up in the international recycling business and will stand the company in good stead going forward. The only challenge here is the valuation has already moved up, and there are significant challenges at such a high valuation. So this is why I've classified this as a high risk rocket. While the valuation is up, considering the current financials and current performance, we believe that the potential is so humongous that growth from here on can also be significant. But yes, considering the valuation, it's a bit of a risky bet. And we are recommending acquisition in Gravita India, keeping a target of 3,000 for a year. But remember, this is a high risk bet. Fundamentally, we don't see any problem. The only challenge here is the valuation. And over a period of time, we believe the company will do so well that the valuation now will look absolutely reasonable in the future.
All right, Gravita India with a target price of 3,000 rupees. While the valuations could be challenging, but nonetheless, you do believe the fundamental is strong enough to support this counter. But Naresh, I'll come to you then. What are your picks? What are your high risk rockets that are ready to fly off this Diwali?
So first would be a buy on LIC Housing Finance. Now the stock has gone through this up and down ticks over the last 1 year. Base is around this 570 to 600 mark. On the day of elections, the stock made a low of around closer to 550 to 580. Back in start of the year, it made a low around 550 to 580. And as well as in January 24. And in the interim post-elections, the stock had actually seen a run-up back all the way to 800 plus. And again, has drifted lower to that band. We made a low around that 580 mark recently and has started reversing. So a strong base made around this 600 to 570, 550 mark. And now is making a reversal. So a good entry point. I would expect eventually a move towards 750 to 800 again. But keep a stop loss at 570 and have an accumulate here with a medium-term view. The next one would be a buy on Nalco, which is National Aluminium. The stock has been trending up. There are two parts to it. One is the fact that the stock continues to be just, say, a few percentage points away from an all-time high. A relative outperformer in the whole correction in the markets. That clearly tells you the momentum is strong here. The second part comes from the fact that what has been happening with the aluminium prices. So aluminium prices have been around this 2,600, 2,700 mark now, which is a multi-year high close to it if you remove out the Russia-Ukraine talk. And at the same time, the bigger advantage for Nalco comes from the fact that alumina prices, which used to be 480 to 550, have gone up to 680. Out here, this could keep it in a positive state for the next 2-3 quarters. So expecting a move towards 280, a stop loss to be kept at 210.
All right, so those are the high-risk rockets coming in from Naresh as well. It is Nalco is one of the counters and the other counter is LIC Housing. But let's move on to the third category, and the one that actually everyone should watch out for, given the fact that the long-term perspective, how do these companies stack up? So these are our value bombs, especially they're undervalued gems. They're ready to explore with potential as well as ideal for value-focused investors. And Sudeep, to come first to you on for this category, it is L&T that you've picked up. Actually, you will be very happy to note that this was one of the safe sparkler bets coming in for Naresh. While you have put this in value bombs, we've seen L&T actually perform exceedingly well, isn't it? Given the fact that the auto inflow that the company has been giving now, it's actually seen some sort of a slowdown in the momentum. But nevertheless, why is this one making to your list fundamentally?
Well, if you look at Larsen and Toubro, I think there is a confluence of positive factors which is supporting it. It's a kind of a Goldilocks situation. You talked about the order book. It's growing rapidly. And the fundamental benefit in this fresh inflow of order is 1/3 plus of the order book is international. Now, and remember, these international orders are higher margin. So overall margin profile of the company is improving. And going forward, this will stand the company in good state. The second is there is significant amount of capex which the government of India has committed to 11 lakh crore plus in this budget, and L&T being the largest and the most recognized construction infrastructure company is and will continue to benefit from order inflows. Third and most important is hydrocarbon, one sector which was lagging globally. There is significant pickup in hydrocarbon capex in West Asia. L&T is benefiting out of that, and again these are incremental margin business, compared to the average margin which L&T earns. So again, this is going to be margin accretive. L&T has moved out of its unrelated diversification, improved working capital management, and also, the subsidiary performances has significantly improved. If you look at the technology companies, subsidiaries, they are also improving performance. And we believe overall consolidated level, L&T's performance will continue to keep improving. If you look at the valuation, I think compared to many smaller peers or not really comparable, but similar companies, the valuation is really attractive. It hasn't really shot up. It hasn't reached stratospheric levels. And the value, I think L&T there has to be some trigger which will take L&T up to a completely different level. I believe this is a very safe and, if you look at the valuation, I think it's a very attractive bet for a conservative investor for the medium to long term. So I have no hesitation recommending L&T and with a target of 4,500 plus for a 1-year period.
Right. So L&T for a target price of 4,500 for a period of 1 year. That's where you're seeing value, strong, supported by strong results and great valuations. L&T is your pick. But coming to you, Naresh, tell us, where are you seeing value?
So looking at two larger names in sectors where there has been consolidation for some time. First is UPL Limited. The stock has gone through a very tough phase of last many years. The stock is at the same place where it was in 2017. We are looking at first instances of agrochemicals turning around. So a lot of smaller names have done well. This being one of the leveraged ones has taken its own time, but at current levels, the stock is at an interesting place at the same prices where it was almost 6-8 years back. In the near term, it has made a base around this 470 to 450 mark where there were 2-3 bottoms. So I would expect that to hold and it's accumulate here. Could surprise on the way up going forward in the year's time. So a stop loss at 480, target would be 620 to 700. That looks interesting. Second is Star Health. The stock has gone nowhere post-listing. The stock continued to drift lower. In the last 2 years, it has made roughly 4 to 5 bottoms around that 500 mark. And 650 has been the upper band. So at 540, 500 right now is a good entry point with a longer term view in the segment. Would keep a stop loss at 500, expect a target price of 650 to 700.
All right, so those are the value bombs coming in from Naresh. One is UPL, the other one is Star Health. And over to you then, Aditya. Which are the stocks making to your list?
So I've got one more chemical stock in the value bomb, Cheryl, and that is Deepak Nitrite. Stock has formed an excellent base. It had broken out from that base, tested almost 52-week highs, and then it has cooled off to retest its neckline from where it had broken out, somewhere around 2,600. within this market mayhem, stock has held good for itself. And from 2600, stock has bounced back beautifully in trade today. I think this is one stock which offers an excellent risk to reward. At current levels, it makes an excellent buy for a target of 3600. On the downside, 2550 to about 2600 is a good support area. And along with that, if I plot an RSI, it is showing me positive divergences on higher time frame charts. And stock had taken support at key Fibonacci retracement levels as well. So all in all, within that chemical pack, I think Deepak Nitrite is something which is still has some value left in itself. Just going by the chart setup, looks like it's getting up for a big breakout on the upside. For a target of 3600 and a stop loss just below 2600, I would go long on Deepak Nitrite. The second is Canara Bank. We all know the way the PSU banks had shot up last year and then it fell off the cliff as well. Canara Bank is no different. It went all the way to 130 and from there it cooled off to sub 91, almost 90 levels. And from there it's formed a beautiful base, Cheryl. So that is where the stock had broken out from. The beautiful part is stock just came to that level and from there it has bounced back. So in technical terms, we just say that it tested the breakout zone and from there it has bounced back. So that shows the strength in that stock. At current levels, again, it offers an excellent risk to reward. I'm looking at a target of 130 to about 150. If somebody's looking on to hold on to the stock for at least a year from now on, and maybe stop loss just below 90 at current levels, I would be a buyer in Canara Bank. And interesting is the indicators, technical indicators also supporting the bullish view in the stock. So overall, I think Canara Bank and Deepak Nitrite offer an excellent value bomb propositions.
All right. Thank you so much, Aditya. In fact, with that, it's time to wind down on this edition of this episode of Cracker Stocks. Naresh, Aditya and Sudeep, thank you so much for taking the time out. So, Cheryl, we have come to an end of this show, but this entire week we are getting our audiences this show to help them make their portfolio shine in this year's Diwali.
Absolutely, Ankita. So every day, at least this week from 1:30 to 2 p.m., please tune in to catch all the cracker stocks that our analysts have in their portfolio. But for now, it's a goodbye from Ankita, myself, and the team that put the show together. Stay tuned. Market Fatafat coming up next.
If you like this video, then like, share and subscribe to ET Now.